Welcome to the Scalable Real Estate Investing Podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Clement. Hi everyone, Mason Clement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? That basically you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. Hi, Scalable Investors. Thanks for tuning in to another episode of Scalable Real Estate Investing. I'm your host, Mason Clement, and today we have Adam Gower on the show, who is the founder of GowerCrowd.com and has a wealth of experience here. Just going to jump into things. Adam, what's going on today on this perfect Tuesday?
Yes, thanks for having me. I'm glad to be here. What is going on? Well, I don't know. You tell me. You know, we've got Fed chairman signaling more interest rate hikes, a lag in the impact of all those hikes, not just in commercial real estate, but in residential real estate and the economy overall, and promise of all kinds of fun to come. What do you think?
Yeah, definitely. I think that people are starting to feel the squeeze from what I've heard, and lenders starting to require those, or have been requiring those reserves to be built up, and might start seeing more distress shake out. But I'm actually going to defer to you and talking about that more, and kind of what you're seeing and what you think, like when you think the opportunities are really going to start shaking out.
Yeah, so I'd say, look, Mason, I mean, the key term right now, I'm going to date stamp this episode. Sorry to do that. So it's not so evergreen, but we're in August, late August, the very last gasps of August, 2023. Really the key word at the moment is patience. So there's a couple things going on. First of all, if you are a passive investor, you're probably starting to see distributions slowing down or stopping, possibly getting capital calls from investments that you may have made in the last, 3 years, 4 years or so, anything up to 3-4 years ago. So those are going to be unnerving, and figuring out how to play them is really not easy. This is a playbook that no one's ever read from before. Certainly not since regulations changed, Mason, in 2012 and beyond, that allow accredited investors to invest with sponsors they don't already know, right? So that's kind of was the big difference. So now a lot of people have started investing passively in real estate deals for the first time, and therefore this is the first time that any kind of downturn in the economy will be affecting them. So capital calls and distribution stops are the first thing. The second is, on the flip side, is capital raisers, people who are out there looking to raise capital. They're also likely to be scratching their heads, in many cases, figuring out how to deal with the headwinds. And they are severe, the headwinds right now, and they're not going away. I wouldn't say they're likely to get worse, but they are not going away. So you've got to be able to, you've got to have the stamina to be able to ride this storm going into the next few months. On the flip side of that, however, of course, is the opportunities that this tends to bring to the market in terms of what is colloquially termed wealth transfer. Oh my goodness, that means that, not wanting to seem Machiavellian at all, but those that are going to be those who will lose assets, who will lose their investments, passive investments. But for every one of those, there will be somebody gaining who will buy those assets at discounts and likely will do very well in the years to come. But let me ask you, we didn't actually chat much before. Your audience, what are they? Are they primarily passive investors or capital raisers, Mason?
I think it's a mixture of both. Might be people that are kind of starting their active investor journey, or might be people interested in passively investing. So just a kind of a handful.
All right, good.
Yeah. Actually, what I like to do, we jumped right into things full speed ahead, but usually I'll have the guest talk a little bit about their background and what their journey was. Speaking of journeys, so why don't you just talk about yourself a little bit and also what led you to establishing Gower Crowd and all that?
All right. So first, let me just start at the very top. Gower Crowd is our business is to build, colloquially, we build, to use a colloquial term, we build crowdfunding websites for sponsors, for people who want to raise capital so they can find more investors, more accredited investors, and raise more capital. So that's our business. So we, in short, we build systems very similar to the big crowdfunding platforms like CrowdStreet or Realty Mogul, Fundrise, Cadre, etc. They're the only ones really still out there that are highly visible. So they build, Fundrise and Cadre are a bit different, but CrowdStreet and Realty Mogul, for example, they're marketplaces. So you can list your deal, if they'll let you, that you can list your deal on their website, and then they market that to their investors. So what we do is we build platforms very similar to theirs, state-of-the-art platforms for individual sponsors. So individual sponsors can raise capital for their own deals. All right, so that's what we do today. My background, and that's why I formed gowercrowd.com. The website that kind of houses all the information about that business. Now, my background, however, is as a real estate sponsor. I started in real estate an incredibly long time ago. I won't even say how long, but in the late 80s, I went through the savings and loan crisis. I've actually been doing some research on that. So I was very active in the late 80s, raising capital for a ground-up multifamily sponsor. I ended up in Japan, where I ran real estate development, or a real estate division of it was a joint venture of Universal Studios and Paramount Studios. So I got a deep experience in institutional real estate investing. It was a niche market, right, for an entertainment company, but still same kind of institutional level discipline and sophistication. So I was there for most of the 90s. Then I came back and did my own developments. So as a sponsor, I raised capital. And in 2007, right before the global financial crisis, or the great financial crisis, sold out. So I sold my entire portfolio and went into that downturn cash rich, looking for deals to buy. And I ended up being hired by a major bank that was struggling under the weight of a portfolio of real estate collateralized lending that had all gone bad, basically billions of dollars. And so my job was to clean their balance sheet, and I ended up at Colony Capital after that, who were the third largest private equity fund in the world, and they bought 7 billion, 6-7 billion, I forget exactly how much, of non-performing loans with the FDIC during the global financial crisis. And then after all that distress stuff left the market and the market started picking up again, I started doing seed and angel investing, kind of venture capital, and was pitched a lot. This was new for me. So I was pitched by all these startups, but essentially, I don't mean to patronize anybody, but these young kids, basically early 20s, that had started these little companies and wanted me and others to invest with them. Well, they were talking the language of digital marketing. It didn't really matter what asset or what their business plan was. What their model was consistently to build whatever business it was using digital marketing. And it was second nature to them. But for me, it was brand new. And so when the Jobs Act was passed in 2012, allowing sponsors to raise, real estate sponsors to raise money online, I shifted my focus and thought, well, I can build these same kind of, I can help sponsors like me raise capital online for the first time. And so that's how we ended up forming GowerCrowd.com, was to specifically build digital marketing systems for sponsors to raise capital. That's my story.
All right. That was perfectly succinct and enjoyable to listen to. So, okay.
Thank you.
So, does the website y'all create link to investor portals, or do y'all provide a portal as well?
No. So the website is just the fruit of my own labors, really. I mean, there is a massive amount of information. There's over 1 million words of content, all educational, all geared to investing in commercial real estate development, syndications, crowdfunding. I mean, it's all there, right? So basically anything that you need is there. It's so much, I even put a search bar on the website. So if you want to get to something quickly, you can just put a search term in and you get a bunch of articles. And then there's a ton of free training. There's some fee-based training as well, but it's just a resource for syndicators and for commercial real estate passive investors as well. We do not list deals. We build platforms so sponsors can raise money themselves. We don't solicit investors. In almost no case do we communicate directly with investors. We communicate with the investors who are active on our platform, because there's a lot of people, passive investors, like to learn the ins and outs. And I've got not only multi-decades of experience, but we work with some of the largest sponsors in the country. Our clients manage over 35 billion of have over 35 billion of assets under management. They've raised probably in excess of $1 billion using our digital marketing systems, our crowdfunding, our tailor-made crowdfunding platforms for them. So we have deep insight into what's going on because we speak to so many sophisticated players, both on the passive and the active side. So we have a lot of passive investors also in our network who look to us for guidance. We don't, again, provide advice, but particularly now, Mason, with an increase in capital calls and distribution stops and struggling projects, investors are that much more in need of high-level guidance and understanding of what's going on. That's what we provide. We've got a newsletter. I don't mean to plug. It's not a sales fest or anything. It's a free newsletter. It's on the website. I mean, if you get on that list, if you subscribe to that, we send out news bulletins every Wednesday, oftentimes with more educational content or opportunities to join webinars and masterclasses, etc. 95% of what we do is free. Sometimes I scratch my head and wonder why I do that, by the way. It's so much I do. It's like I just paddle very, very hard and not sure quite why sometimes. But look, I'll tell you what, I really enjoy helping people. At the end of the day, there's nothing that gives me greater pleasure than helping people, particularly during these tough times and these times that are likely to get tougher in the coming months.
Okay, that makes sense. Yeah, what I was kind of referring to what you said, that I was just going through your website. I know you'll create a website for a client, or like create a platform. So what does that look like? I know you're driving traffic to it through like paid and unpaid marketing and things like that. But that's kind of what I was wondering was, is there any investor portal infrastructure behind the website you create for the client? Because I know there's like all these different resources you just mentioned on gowercrowd.com, but like what if I was to work with your company, for example, and you created a website for my capital raising efforts?
Perfect. All right. So then what we would do is we would look at your online presence. I mean, for example, well, for your online presence to start with, see what your website currently looks like. Take a look at your social media presence and then optimize it. Well, what does that mean? Well, it means that your website really has to take the place of you in a way. So let's say you want to raise money for the real estate projects that you're doing, right? You need to you want to raise equity capital. So the way that you would typically do that is you would network, right, through your CFA, your financial advisor or accountants, lawyers, or you go to conferences, etc. And then you would meet people through that network and you would tell them about your background and your track record and your investment philosophy, and right, that's the way that it used to be done. So what we would do for you is we would put all of that story, your entire story, and your investment thesis on your website. So now what happens is that a prospective investor can go to your website and they can learn about you without having to have direct contact with you. Nobody wants to be pitched. No one wants to be sold, right? We all want to be able to do our research, particularly in investment matters. You want to be able to do it anonymously. And that's how we communicate. That's how we research anything that we buy. We do it anonymously. Let's say you want to buy a new car. Well, you don't speak to somebody at Ford, right, do you? First, or wherever you're going to buy at Lexus. You don't call Lexus and say, hey, I want to talk to somebody. The first thing you're going to do is you would do research online to decide. And then you might go into a sales room or a showroom, to get into a discussion with a salesman. And nobody likes that either, right? You want to be able to do all your research, come to a decision before you even walk in, and be able to transact once you've learned everything that you want to learn, once you have all the information you need. The same is true for investors when they're investing capital. You want to be able to, as a passive investor, you want to be able to research not just the investment that you're considering, but also the sponsor and who they are. So it's a sponsor's responsibility, kind of. If you want to make it more efficient for yourself, the best thing you can do is to make it easy for your prospects to do research on you. Don't have them fighting to figure out who you are and what you are. Put it all out there online on your website, and then push it out to social media so they can find you accidentally. And then what happens is they'll come to your website. That's unpaid media. Or you can advertise, but even advertising will drive people to your website as they do research, right? LinkedIn or your website, wherever it is, and make it easy for them to research you and gain confidence in who you are, to build trust in you so that they want to invest. That's what we do. We help you, or we will do it for you, or we'll guide you through how to do it, to build that kind of information based website, educational website that makes it easy for your prospects to learn about you so they become predisposed to investing with you, and so that they feel safe investing with you because they know you.
Yeah, definitely. Like if you have a loyal following, it's often the case where they feel like they already know you even without speaking with you, because you've absorbed so much information about you. That makes a lot of sense.
Yeah, and
Okay.
that's what we build for our sponsor clients.
Okay. So you kind of mentioned you could either guide the client or do it for them. So are there different tiers of service?
Yeah. So the most time, doing it properly is time consuming. Our clients, our private clients will hire us to do it for them. So we have a team of 25 or so people that will build out a system for you, including all the content you need. I mean, it's a really heavy lift. All the tech connections, all the automated email systems, automated posting on social, monthly newsletters, email systems, whatever, right? We build all the tech. You don't have to worry about anything. So we do it all for you. But some folk prefer to do it themselves. They don't mind spending the time to do it. And so we can train you how to do that as well. That's we have a program called the Syndicator program, where the entire process that we've used to help our clients raise in excess of $1 billion using our systems, that's all packaged into a training course, a 12-week training course. And then I'll personally guide you through that process as well in live weekly calls. What I would say, though, is the live weekly calls actually are very, very advanced. In some cases, members will ask specific questions, tech questions. How do we connect this to that? And in some rare cases, we'll even do it for you if you're having too much trouble. We'll help you with that. But those calls also tend to involve very advanced real estate strategic discussions about what's going on in the market, how to deal with what's going on in the market, or very advanced marketing tactics and techniques to drive traffic to your website.
Okay, so who is the ideal client? I guess it's someone that's already done a few syndications. At least they were like a co-GP on their first or second deal, and they're coming to you with a track record. Or could someone even start without having done an offering, an actual syndication?
So we are not really a good place for somebody who is looking to start out. We're very advanced. So our ideal client is a shop that has been around multi-cycle, looking to grow or to leverage their time better, who want to raise significant amounts of money. If you're not looking to raise 20 million and up, we're probably not a good option for you, right? You've got to have some serious growth desires or ambitions. But for somebody starting out, we're not the right place. The ideal client has multi-cycle experience, wants to grow, wants to find more investors than they currently have, wants to raise more from their current network, and doesn't want to spend as much time doing it, right? So those are our ideal clients. And then I would say the second tier are those that do have some experience and who do want to scale, right? They've done some deals, they have some experience, they have a track record, they can show some deals that have had success, they've got a valid, proven business strategy or investment strategy that they have some track record showing, but who have time and don't mind building out the system themselves, or just want to cherry pick certain components of the system to build in their own time. So that would be the folk that we would work with directly, rather than building it for them.
Okay.
Just to clarify, so our private clients, I would say the smallest we have has, well, with one exception, but the smallest we have has around 100 million, little under 100 million of assets under management, and the largest have into the significant billions of AUM.
Okay, very nice. And I assume that they're doing like a variety of different offerings. I'm just curious, though, I wanted to talk a little bit more about the Reg CF, the crowdfunding regulation, because you seem to kind of mention that on your website and talk about the crowdfunding, but it can be a very broad term, but recently I've been learning a lot more about a specific regulation. So could you talk about like the nuances of that and how it might differ from like a 506B or C offering that's more common?
Sure. So what you're talking about, for that one person who's listening that doesn't understand, is that in the Jobs Act of 2012, there were several regulations or sections that fell underneath And they were, could get all into the details of exactly how they were numbered, but basically you ended up with the key changes or the impactful regulations that emerged from the Jobs Act were, as you brought out, Reg CF, which stands for Regulation Crowdfunding, Regulation Reg D 506C versus 506B, and Regulation A+. So let's just talk about all of those very briefly. Regulation CF is really the only true crowdfunding regulation, Regulation CF. And to do a Reg CF offering, you have to do it through what is called a funding portal. And a funding portal is directly regulated by FINRA and the SEC. It is incredibly complicated, very, very involved, highly managed, and you can only raise a certain amount of money. It's small. You can raise from non-accredited investors, and I think the maximum you can raise is 5 million or something like that. Its first originally was $1 million. It was geared very, very small. Reg CF, the impact of Reg CF on commercial real estate investing is negligible, de minimis, tiny, tiny impact on how much has been raised overall. The next regulation that's had more impact than Reg CF is Reg A+. Reg A+ is like, it was known as a mini IPO. So here you've got to do a lot of disclosures. It's still highly regulated. There are considerable requirements for what you can say, how you can market it, etc. You can still market to non-accredited investors. And that has also been used, but is also relatively tiny part of the capital formation world that emerged out of the Jobs Act for commercial real estate. The big one is Reg D 506C versus 506B. Now, 506B is the way it used to be. With a 506B offering, you can raise money from a limited number of non-accredited investors, from accredited investors, but you have to have had a pre-existing relationship with them. You have to know them before. You've got to know them personally in some capacity to be able to solicit. That means that under a 506B, you cannot advertise. Oh my goodness, you can't talk about your deals online. You know, you can't talk about projections or how much you've made or how much an investor might make investing with you. You can't ask somebody to invest with them unless you already know them. So you can't do anything online, really. By the way, my own CYA, I'm not a lawyer. Check with a securities attorney before you do anything, right? These are just informational, educational observations. Now, a 506C offering, that allows you to solicit from people you don't know. You can only solicit investments from accredited investors. So you got to be careful that you're going out to accredited investors only. But it also means that you can advertise. You can talk about projections. You can say to somebody, please invest with me. And that is, I wrote a book called Unleashed a couple of years ago that quantified how big 506C versus Reg A and Reg CF was, and also versus 506Bs. And 506C offerings have come to dominate the capital formation world, because now you can advertise, right? Whether you paid or non-paid, with a 506C offering, you can advertise. That means you can now reach every single accredited investor in the country all at one time by using social media and digital marketing. That's how my company came to be, because it's not easy to actually do that, right? Even though you can, it's not easy to. So we help sponsors to reach accredited investors if they're using 506C offerings.
Okay, what about the regulations on advertising for the Reg CF and the Reg A+?
Yeah, so again, I'm not, you cannot advertise a Reg CF. Like I said, you have to go through a funding portal. That's what you have to go through a funding portal. You can't, I don't even think you can solicit anybody for anything, or you have to direct people to a funding portal. So no advertising. All right. End of story. You got to go to a funding portal. They do the marketing for you. A Reg A, you can advertise, and you can advertise openly, and you can advertise to non-accredited investors. So we've worked with some Reg A offerings as well, but most of the work that we do is 506Cs, accredited investors.
Okay. Yeah, that's very interesting stuff. Is there any pre-existing relationship with the Reg A Plus or crowdfunding ones? I'm just curious. I know it's not like in the grand scheme of things impactful or anything, but since it's not talked about a lot, I'm just curious since you're a wealth of information here.
Yeah, Reg CF, there's no restrictions on there being a pre-existing relationship, but to underscore this, you have to go through a funding portal. You cannot just launch a Reg CF offering on your own. You go to a funding portal. Small change is a good option if you want to do a Reg CF. Eve Picker's a good friend. She founded smallchange.co, I think. You probably get to it, smallchange.com. That's a funding portal. You cannot raise money under a Reg CF other than through a funding portal. And a Reg A, you don't have to have a pre-existing relationship either. And you can advertise. It's a lot more expensive and complicated to do a Reg A because it's like an IPO. So there's just a lot more restrictions. So it's a lot more costly from a legal perspective and also from a marketing perspective, because if you're raising money, at $100 at a time, which is why you would presumably do you do a Reg A to non-accredited investors, you've got to have a lot more of them to make up your numbers. So you've got to have it's a very different kind of marketing than it is if you're laser focused on accredited investors.
Okay, that makes a lot of sense. Back to what we were just changing gears, what we were talking about earlier about like the distressed commercial real estate properties, potential deals shaken out. Obviously, there's a lot of different types of commercial real estate. So is there a certain property type or sector that you think might present more opportunities than others?
Well, that's an interesting question. Yeah, I mean, going into the downturn, as we are now, August 23, over the next 6 to 18 months, you're going to start seeing discounted distressed opportunities across all asset classes. There is no immunity. The first ones that have risen to the surface are, of course, office, larger scale office in major downtown areas or major city downtowns. But opportunities for discounted distressed deals are going to emerge in multifamily and really across the board. There won't be any asset class that will go untouched. Interest rates will impact every asset class. So really the key today is to be patient as of August 23. Sorry to date stamp your podcast, but to be patient, keep your ear to the ground. If you're a passive investor, align with sponsors. I mean, you could do it with Gower Crowd as well. We're also looking to source discounted distressed deals, and we'll present them to investors in the coming months. But align yourself with sponsors who you feel comfortable with, who are looking for distressed deals, and who will be able to bring them to you. You're going to have to move quickly when that happens, because discounted distressed opportunities come and go very quickly. And you've got to be very, very sophisticated in how you deal with them. They're very complicated. They are almost always value add, but not the kind of value add that you're used to seeing. Value add in the market until now has been paint and carpets, to oversimplify it. But today it's how do you figure out what the mess really is, and why is this deal actually distressed? Is there litigation? Is there deferred maintenance? Is the seller, what does the seller let happen to this property before they lost it? There might be litigation you got to deal with, very complicated, and requires steady hand and experience. So align with experience. I know this because I've been through it multiple times. During the downturn, global financial downturn, I think I mentioned, or crisis, I told you, I'd worked at a major bank and then also a private equity shop where I handled billions of dollars of distressed deals. So somebody that has that kind of experience is going to have more understanding and likelihood of success going into this downturn. So you want to align yourself with people like that. So it's those kinds of opportunities now. I know that's not what you were asking, but that is where the opportunities will lie in the coming months. Just be patient now, align yourself with trusted partners, and wait. The opportunities will emerge.
Okay. Yeah, no, it's hard to really have a crystal ball and say exactly it's going to happen this time, but you think maybe at least 3 to 6 months from now?
Yeah, I mean, towards the end of this year and going into 2024, you're going to start to see more and more opportunities. Absolutely, yeah. Across all asset classes, including multifamily and all kinds of places you might not have imagined it's showing up. Some are more immune, some asset classes are more immune, but nothing's immune from interest rate hikes. So there will be opportunities everywhere.
Okay, well, at least with like the bridge financing, your adjustable interest rates and all that, I guess if somehow they had some fixed rates and were able to become insulated from the rising rates, it would work.
There's no insulation.
Oh.
Yeah, unless, I mean, the only place where there's maybe insulation is single family homes where people took out 30-year fixed sub 3% interest rates on their mortgages. And that insulates them from dramatic mortgage payment hikes. But it also creates stagnation in terms of where you can live. I mean, it makes it very difficult to sell a property that has a sub 3% interest rate, only to buy something that has over 7%. So at the moment, there's a freezing of the single family home market, but that is also going to break free as well, particularly if unemployment goes up, which it inevitably will over the coming months, and if businesses start to dial back on their spending, as they inevitably will, as interest rates start to bite businesses also, and the economy starts to slow down. So you're going to start to see even single family home prices coming down potentially dramatically, as for example, a lot of Airbnb investors suddenly start feeling pain with their investments. Right, they're more likely to be on shorter term debt, or that they may find that other aspects of their lives require them to generate cash. The best way to generate cash is to sell those homes that they bought for Airbnb that people aren't renting anymore, that they got to get rid of. That's going to have a downward pressure on single family homes. So nowhere is going to be immune.
Okay, very interesting. Well, I know that you had a hard stop coming up, and I'm running out of questions, to be honest. So
Right.
I think that we are rounding out the conversation pretty well. If someone wants to get in touch with you, what's the best way to do that?
Yeah, thanks, Mason. I appreciate it. So really the best thing to do is to go to gowercrowd.com and sign up for our newsletter. It goes out every Wednesday. It's totally free. It's very detailed. We cover all the latest news and headlines in real estate, commercial real estate, syndication, and crowdfunding. And as soon as you get one of those on a Wednesday morning, hit reply if you want to contact me and let me know what you want, and I'll get right back to you.
All right, excellent. Yeah, I've been through your website. There's definitely a lot of different resources that I want to check out. So that's great that you're doing that, and we really appreciate you jump on the show to add value here as well to our listeners. So thank you.
Thanks for having me, Mason. It's been a pleasure.
Hey guys, I appreciate you taking the time to listen or watch this episode. As you might have noticed, we don't run ads, but what I would like you to do is just subscribe to our YouTube channel. That would help us out tremendously. You don't even have to leave a review, but if you do feel like you would gain a lot of value from this episode, feel free to share it with your friends and comment, like, subscribe, all that. But subscribing to YouTube would be what helps us the most. That's the only thing I ask. Thanks a lot. And if you do want to get in touch with me, feel free to email me at mason@scalablere.com. Thanks a lot.